Before we get into today's video, some regulatory compliance. My name is Andrew Alexander. I am Head of Investments for Three Counties, an independent financial advisor based in County Durham, England. This video is for anyone who has an interest in investing and investment markets, both retail clients with no experience of investing through to industry professionals who invest for themselves and their clients. As independent financial advisors and wealth managers, there is no commercial relationship between ourselves and today's guest. The purpose of this video is educational, and in no way should any of the content be construed as advice, nor is it an enticement to invest. Past performance is not a guide to future performance, nor a reliable indicator of future results or performance. The value of investments may go down as well as up and is not guaranteed. Therefore, investors may not get back the amount originally invested. And now, onto the video. Welcome everyone to another of our Investment Manager videos, and many thanks once again for tuning in. Today's theme is ESG, but not in the traditional way of thinking. Rize ETF have recently launched the Environmental Impact 100 ETF, known as LIFE, the focus being much more on the sustainable impact as well as ESG. But what does that actually mean to those investors who focus primarily on sustainability? Well, today I am asking this and other questions to Felix Boudreault, managing partner at Sustainable Market Strategies, the world-class independent ESG intelligence firm that provides the thematic ESG research to Rize for the creation and management of this new strategy. But first, before we get into the content, as ever, it would be wonderful if you could subscribe if you haven't already. It really genuinely does assist us in providing this weekly content on investment markets and financial planning. So, after all that begging, and once again, many thanks for joining me today, Felix. ESG is a very topical subject at this moment in time. What makes life different from the vast cohort of other green investment funds?
Sure. First of all, thanks a lot, Andrew. I'm a fan, so it's an honor to be with you today. So I'll do my best to provide as much information. I think your first question is extremely good, very relevant. ESG has been all over the place, and obviously, as a partner in a firm that do ESG research as a living, I'm not going to trash ESG or anything like this. It's just that how it's been kind of used recently is a little bit maybe different than what the core meaning of it should be. So you see a lot of funds using ESG and asset managers talking about ESG, and the only thing they'll use as a metric is they'll use a score or a ranking or a scoring kind of methodology. But the problem is corporations have become very smart in playing a little bit with these ranking and ratings and answering questions and questionnaires in the way in a way that would have them ranked very high. And so then we end up with an ESG scoring kind of universe that is a little bit disconnected with what we want as a society in terms of what companies should provide in terms of services and products. So the genesis of this fund was really to say, hold on, we don't necessarily want to aim for a certain score on ESG or a certain carbon footprint as a fund, because what happens is then you're basically incentivized to pick companies in the technology sector, for example, because they have a low carbon footprint and they're typically very smart in the way they answer all these questionnaires, and they score very high. You'll see, companies like, Microsoft and Apple are in most ESG funds.
Yeah.
But when you look, forward and you're asking yourself, which companies are really going to help us as a society solve the challenges that we're facing? In the case of this fund, it's the environmental challenges that we were looking at. And then you're basically left with a very different set of companies. And so that's why it's labeled environmental impact and not anything ESG in it. It's the first environmental impact ETF in Europe. There are a few in North America. but this one is very about more enabling and less labeling. So looking at companies that can really provide solutions to the challenges that we are facing. And so that was really the core difference, I would say. And that ends up translating into a very different composition universe of companies, because now we are in sectors that are directly involved with these issues. So in the materials, in the industrial sectors, so companies that really need to be transitioning and investing in developing new technologies and innovative ways of tackling these problems.
Yeah, and certainly from my dealings with clients who have an ESG bias or a desire to invest ethically, it is all about the impact, and it's about making the difference as well as generating returns. So I absolutely agree with what you're saying. Now, moving on to life itself, Rize obviously have an absolute focus on using the most effective index for their ETFs, and be it through cybersecurity, be it through the life sciences ETF. It's always about how do we construct the best, the most robust, the most effective index for our investors. How does Life approach this?
Yeah, so I mean, I'm not going to speak on behalf of Rise on this, but that's something I also very much appreciate from their funds, is that they, there's basically two ways you can go when you develop a fund like this. You can license an existing index that have been done by sometimes some of the bigger companies, but these would likely be based on some kind of methodology that is probably exclusionary. So they'll select a number. They'll say, like, we want companies with either a carbon footprint of X and above and below, or a score of X and below. But this, without trashing them, it's not going to be experts who will be developing this. It's going to be basically almost algorithms that are producing these indices. Rise has taken the decision to always work with thematic experts. And so on this one, we are Sustainable Market Strategies. We are the thematic expert on this. We've been in this space for as a company for 4 years, but personally, I was working on climate change for 15 years. I was the director of negotiations for international climate change negotiations for the government of Canada. And so I've been around this theme and this question of what does it mean, this transition to a low carbon and cleaner economy? What does it mean in the real world? Like what technologies, what companies are going to benefit from this? And so we've been studying this theme. We've published over 175 notes on these topics. We've analyzed over 1,000 companies like this. And so when they approached us to work on this, it was very much relevant to the work we were already doing, because we were always assessing companies based on their potential to have an impact on these environmental challenges. And so that's how the index was built, is really much forward looking. We project ourselves in 10, 15 years. We take planet Earth as a stakeholder and look at what does she need us to take care of for the the sustainability of the planet. And so that led to also realizing that there's a lot of talk about carbon, climate change, obviously top of mind problems, one of the most challenging issue we face as a society. But unfortunately, it's not the only challenge. There's biodiversity loss. There's issues with water quality and accessibility. There's issues with air pollution, soil pollution. There's issues with the circular economy. How can we make the economy a little bit more circular so that we continue to grow? I mean, we're all for economic growth, but in a smarter and more sustainable way.
And again, I keep coming back to the solution side of things, the way to solve these problems, and how that is the driving force of I would suggest ESG investors moving forward. Now, taking everything in that we've taken everything into consideration that we've spoken about, there will be a lot of viewers who will have a deep interest within ESG, who will hold ESG funds at this moment in time, who will have exposure either wholly or in part on their own investment portfolios. How does the approach of life differ, or the outcomes on a stock level, so on an investment level? Is it the same as a traditional ESG, or will the inclusion of life within a portfolio add diversification to existing holdings?
Yeah, absolutely. Great question, because I would even challenge our listeners here to, if they think they're invested in ESG funds, have a look at the holdings of these funds.
Mm-hmm.
And you may be surprised to find some names that you would be like, really? Like, what does it do there? But having said that, this fund is really about, again, solutions. So it does have a difference, because ESG scores are, and that's been studied many times over, there's a direct correlation between market cap and ESG score.
Right.
And the reason is kind of simple. Like, as big companies have more resources to answer some of these questionnaires, to provide data, to sign on to all kinds of policies, internal policies. The small caps, they sometimes are struggling. They are really working on the solutions, and may not focus necessarily on that aspect of the business. And so we by having this environmental impact fund, we realize that we're actually a little bit more distributed between large cap, mid cap, and small cap. So it's probably, I think it's around 40% mid cap,
Right.
and then the rest is split between large and small. So about maybe 30%, 25 to 30% of each.
Mm-hmm.
Which is quite different than a lot of your run-of-the-mill ESG funds that will be invested in the Microsoft and Apple of this world.
Yeah.
But there are some large caps. I mean, Tesla is in this fund. I mean, it would be hard not to include them. They have a positive impact. But also big, some industrial firms or life sciences firm. For example, Schneider Electric is a hundreds of billions in market cap. And they are really much involved in the energy efficiency solutions, for example, for buildings, for cities, for stuff like this.
Yeah.
And then if you move to the small cap, you find some more pure plays actually in the small cap, because typically might be a company in water solutions that came really from an idea, a patent, a technology, and then they created a company around it. And so it's going to be much more pure in terms of revenue, that are relevant to the environmental issues.
Yeah.
Because that's also a main point of this fund, is that we're looking for pure plays. We want the majority of the revenues to be derived from these environmental challenges. And so by doing that, it also kind of favors some of these small caps.
Yeah, and again, reverting back to the Rize suite of funds, it does come down to the purity of the revenue stream. But ultimately, again, keep coming back to it. It's about solutions. It's about solutions to problems that we have, that the world has, and focusing upon that. And then looking at the opportunities from an investment perspective just seems to be a very, very sensible approach, and something that I can see being very attractive, as well as the diversification benefits for existing ESG investors. Felix, as ever, it's an absolute pleasure to speak to you. Thank you very much for your time today. I'm sure we'll get you back on the channel soon. So we'll catch up soon. You take care, and stay safe.
Thank you so much, Andrew. Bye.